What a day and what a week. On this Friday, the market got a little of what it's been looking for, a partial trade deal. President Trump met with China's vice premier at the White House, where the two sides announced the first phase of what they call a substantial trade deal. Investors were upbeat all day about anything happening, and they got it. The Dow Jones Industrial Average advanced 319 points to 26,816 after rising more than 500. The Nasdaq was up 106 and the S&P 500 rose 32. And all of the major indexes were higher for the week on the hope that progress was being made in trade. Bob Pisani has more on the market's response.
The rally rolled on today with the Dow having its best day of gains since early June. All three major averages snapping 3-week losing streaks. Investors cheered prospects of a partial U.S.-China trade deal. The question now is, how much more steam does the rally have left? The S&P has moved almost 40 points in the last 24 hours, now just 1% from its old highs. The bigger question is, does a mini deal get the markets through Christmas? The general consensus among traders is it's not clear. The key problem for the markets is that it doesn't really change the lower growth narrative for 2020, at least not yet. And again, we don't have a lot of details. And it certainly doesn't end the trade wars. This is the battle over 2020, where we'll see battles over capital flows and export controls and industrial policy. Finally, two other factors fueled today's rally besides trade talk. That's a potential Brexit breakthrough, which sparked a rally in Europe, and word that Hong Kong protesters are discussing dialing down the protests, and that lifted the Hong Kong stock market by better than 2%. Next week, fourth quarter earnings season will kick off with major banks like J.P. Morgan, Goldman Sachs, and Citigroup all reporting, and the markets will finally shift their focus back to the fundamentals. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.